Friends, myself Subrata Mukherjee, and I request the student to note the problem in your notebook so that you can understand it properly. And today we will discuss a problem on single entry.
Mr. Kumar kept no books of accounts for his business. An analysis of his rough cash book for the calendar year 2015 shows the following particulars. On receipt side, receipt from debtor 60,000, further capital introduced 5,000. On payment side, overdraft on 1st January 2015 7,400, paid to creditors 25,000, business expenses 10,000, wages paid 15,500, proprietor's drawings 3,000, balance of bank on 31st December 2015 4,000, cash in hand 100. The following information are also available: balance on 31st December 2014 and balance on 31st December 2015. Debtors opening 53,000, closing 88,000. Creditors opening 15,000, closing 19,500. Stock in trade opening 17,000, closing 19,000. Plant and machinery opening 20,000, closing 20,000. Furniture and fittings 1,400, opening and closing 1,400. From the above particulars, prepare trading and profit and loss account for the year ended on 31st December 2015 and the balance sheet as at that date, after providing for depreciation on plant and machinery at 10% and on furniture and fittings at 5% per annum. In this problem, we have to open the opening balance sheet, that is the balance sheet as on 31st December 2014, trading and profit and loss account for the year ended 31st December 2015, debtor account, creditor account, and the closing balance sheet, that is balance sheet as on 31st December 2015. Now, in the question, it is given the cash book has been drawn. So, on the debit side of the cash book, receipt from debtor 60,000. So, bank account debit or cash account debit to debtors. So, it will be posted in debtor account. So, by cash or bank account, it is 60,000. Next is further capital introduced. So, in the closing balance sheet, you will have, this is the liability side, you have opening capital, add further. So, here we will write 5,000, that is the additional capital introduced. Then, on the credit side of the cash book, it is given overdraft on 1st January 2015. So, overdraft figure will be appearing on the opening balance sheet. So, overdraft is 7,400. Then paid to creditors. So, the amount paid to creditor will appear on the debit side of the creditor account. So, to cash or bank. So, your journal entry is creditor account debit to cash. So, this is 25,000. The next item is the business expense. Business expense will appear in the PL account. So, to business expense. So, I have kept some portion for preparing the trading account, and then I have written the item of PL account, that is the first item is business expense. The next is wages, to wages. So, cash wages account debit to cash. Wages account debit to cash is the journal entry that has been passed in the cash account. It has been written on the credit side, that is on the payment side. So, it will appear in the trading side, that is on the debit side of the trading account. So, to wages. To wages is 15,500. The next item is drawings. So, drawing, the journal entry of drawing is drawing account debit to cash. So, it will appear on the closing balance sheet, that balance sheet as on 31st December 2015. So, opening capital we will find out, then add further capital less drawings. So your drawing amount is 3000. The next item is the closing balance of bank. So this will appear in the closing balance sheet. So bank balance, so this is bank balance is 4000 and the cash in hand is 100. So I have written this to figure in the closing balance sheet. Next, the balances of debtor, creditor, stock in trade, plant machinery and furniture and fitting is given. So debtor balance, so to balance BD, so this is the opening balance or balance as on 31st December 2014 and this is the closing balance. So on the debit side of the debtor I have written the opening balance of 53,000 and on the credit side I am writing 88,000, that is the closing balance. Now 53,000, this figure will appear in the opening balance sheet, 53,000 in the opening balance sheet and the closing 88,000 will appear in the closing balance sheet. So the difference in the debtor account represents the credit sales. So this is credit sales and this balance will be 95,000, 1,48,000 both side total. So I will write this 53,000 in the opening balance sheet and 88,000 in the closing balance sheet. So I am writing the opening balance of debtor, this is 53,000. Then in the trading account I am writing the credit sales. So by credit sales I have found out from the debtor ledger 95,000. And the closing balance of debtor I am writing in the closing balance sheet. So I am writing it in the inner column 88,000 because there will be a provision of 5%. So less I am writing this provision at the rate 5%. So this will be 4,400. So outside total will be 83,600 and this provision for bad debt will be written on the debit side of the profit and loss account. So to provision for bad debt I am writing it on the PL account. This amount will be 4,400. The next balance is the creditor balance. So opening balance of creditor is I am writing it on the credit side of the creditor account. So by balance BD, so this is 15,000. So this will appear in the opening balance sheet and to balance CD. So this will appear on the closing balance sheet. So 19,500. And the difference in the creditor account will represent credit purchase. And this credit purchase will appear in their trading account 29,500. So this is your balancing figure. And both side total is 44,500. So to purchase I am writing on the debit side of your trading account to purchase 29,500. The opening balance of creditor in your opening balance sheet for rupees 15,000. And the closing creditor balance I am writing it in the liability side of the closing balance sheet. So this figure is 19,500. The next item is stock in trade. So this will appear in the trading account as well as in the to balance sheet. So to opening stock will appear in the opening balance sheet for rupees 17,000 and the closing stock will appear in the closing balance sheet for rupees 19,000. So in the opening balance sheet, opening stock for rupees 17,000, and in the closing balance sheet I am writing the closing stock for rupees 19,000. Next item is plant and machinery. So the opening balance of plant and machinery is appearing on the asset side for rupees 20,000. So there is no purchase or sale, and the closing balance will appear in the closing balance sheet. So in the closing balance sheet I am writing the closing balance of plant and machinery. So I am writing it in the inner column because there is a depreciation. So less depreciation at the rate 10%. So this will be 2,000, and this 2,000 I will write in your PL account. So I am writing the amount of depreciation in PL account. So to depreciation on plant and machinery for rupees 2,000. Next item is furniture and fitting. So opening balance of furniture and fitting is 1,400. So I am writing it in the opening balance sheet on 31st December 2014, and the closing balance of furniture and fitting in the closing balance sheet. So furniture and fitting is 1,400 in the inner column, less depreciation at the rate 10%. So this will be 140, and outside balance is 1260. So depreciation on plant and machinery, I am writing it in the PL account. So to depreciation on plant and machinery 140. So I have entered all the transactions given in the question, and now I will close the account. So I have already closed debtor and creditor account to find out the balance of credit sales and credit purchase, and now I will close the opening balance sheet. So this is the opening balance sheet. On the asset side, this is 91,400, and your opening capital, this is the balancing figure, is 69,000. So this 69,000 will appear in the closing balance sheet. Now I will close the trading and profit and loss account. So on trading account first, so on credit side 1,14,000, and your gross profit will be 52,000. So on the debit side of trading account, you have opening stock 17,000, wages 15,500, purchase 29,500, and gross profit is 52,000. Then by gross profit, BD 52,000. And on the debit side of your PL account, there are 4 items: business expense 10,000, provision for bad debt 4,400, then depreciation on plant and machinery 2,000, and depreciation on furniture and fittings. So this is furniture and fittings. This is furniture and fittings will be 140, and the balancing figure is your net profit, that is 35,460. So I have already closed the debtor account, creditor account, and now I am closing the final balance sheet. So balance sheet as on 31st December 2015. So on the asset side, you have bank balance of 4,000, cash 100, then debtor 83,600, closing stock 19,000, plant and machinery 18,000, furniture and fittings 1,260. So your asset side total is 1,25,960. So you have the opening capital of 69,000, and and your net profit is 35,460 from the net profit or profit and loss account we have calculated. So your closing capital will be 1,06,460. 1,06,460. So opening capital 69,000. Add further capital introduced 5,000, less drawing 3,000. Add net profit 35,460. Closing capital 1,06,460, and the liability side total will also be 1,25,960.
You have understood the problem, and students who are viewing my channel, I would like to request them to subscribe my channel to get regular updates and to see the playlist section of the channel to see the videos that I have uploaded there. Thank you.